In this video, I will be talking about stocks and or money management. Please keep in mind that I am not a financial advisor. The strategies and the money decisions that I implement are based on my personal financial situation and my goals. How I decide to invest and manage my money may not be the correct strategy for you. You should not take anything said during this video or on the website www.wealthinspiredstudenteducation.com as financial advice. Always do your own research before making any financial decisions. All right, so we're going to dive into the meat and potatoes of this budget. What I'm going to do, I will tell you, I am definitely not a skill. I'm self-taught in Excel. If you know Excel better than me, which would be anybody who has taken any kind of class or knows how to use it or been trained, feel free to ignore some of this stuff. But I'm going to treat this video as if you were like me and know nothing. So, but the budget part, let's dive in. So first thing is, if you want to change anything in Excel, if you want to change this from my master plan to my master budget, you just click on it. You can type in whatever you want. All right. So step one. So over here in the budget section, the first part here is going to be all of your assets, all of your income. All right. So you have, hopefully you can build, the goal is obviously to build multiple assets, but an asset for this purpose is anything that puts money in your pocket on a monthly basis, not a trade. So if you have baseball cards, that doesn't count as an asset. If you have sneakers that you're going to sell, it doesn't count as an asset, right? So if you have stock, right, well, it depends on what kind of stock it is. If you have like I own Tesla stock doesn't pay a dividend, so that doesn't count as an asset. It will on the balance sheet, but not up here, not when we're talking about income. Now, I also have stock in, right now as of this video, this might have changed, Walgreens, right? Walgreens pays a dividend. So that means every quarter they pay me money. So therefore it's making me money. So therefore that counts as a true asset, right? For this budget. So just to make sure that's clear. All right. Now, if you were going to add lines, let's say you had a whole bunch of incomes, more incomes than I put here. So if you're going to add a line, the best thing to do is to add a line in the middle. I click on something like if I want the line to become between these two, excuse me, you're going to do insert and the line will go there. Now you can do a paycheck 3 if you if you have that. So excuse my voice. So as far as this goes, the reason why you want to do it that way is you'll see down here, anything that's yellow, the reason why it's yellow is it has an equation in it. All right. So what will happen is that this equation, let me go back. So this button here is just the back button up here. All right, so that gets rid of that. So you see like this equation, for example, anytime you see an equal sign, so if you want to put an equation in there, you start it with equal. So this says equal, it's going to sum up B4. So B4 right here, anything I put in there, to B13. So anything from here to here. So if I put a number, there, you see it shows up here, right? And there's more equations in all these, right? So so there's equations in here, so it's automatically set up. So if you do that insert like I just did a second ago, I'll show you a couple of things. So you insert, now you have a third paycheck that's coming in. You'll see that this equation now changed. It went from, it's still going from B4, but because you put it in the middle here, it's going to add up all the way to B14, right? So instead of B13 like it was a second ago. So that's why if you're going to add anything, and add them like that. Now, what you will see though is over here, see all these zeros? It's 0 because there's equations in them. But because I just inserted this column here, there's nothing in these, right? So it doesn't know that you want to put that same equation there. So if you do insert things like that and no zeros show up, you can just go like this. We'll highlight these two. We'll copy them. Copy. And I have a Mac, so it's Control Actually, I'll just do it so you can see it. I'll do it this way. Paste. All right, great. So now it put those equations in there. All right, so pretty simple. All right, so let me go back. We'll get rid of all that stuff that we just did. Great. Now, going across here, well, to stay here, so we have the quarterly and the month. So this is how much when you're doing your budget, how much you expect from each asset for that particular month. Or if you're paid quarterly, how much you expect to make quarterly on this asset. All right. Pretty simple there, right? So this is just your budget. This is just what you're expecting. Now, if you're in a job where you have the same paycheck every single week and it makes it very easy to make this, great. Then you'll be more precise. If you're like me, I'm in a sales position where my checks are different, every week. Then, I'm going to guess as best as I can. Basically, what I do is I took my last year's income for the year, and then I divided it by 52 weeks, and that's how I came up with my budget. So now, hopefully, obviously, do I want to make more? Sure. If I make more, that's why we have a budget. We have an actual, which we'll talk about in a little bit. Or if I know I have a couple of big sales coming through, I might budget higher if I know it's going to be higher. So just gives me a baseline by doing that, taking my last year's income and dividing it. Now, you'll see here you're going to change this every month. So once a month you're going to just change these numbers. So I'm in February is coming up. It's January right now. Now most months have 4 pay weeks. I do mine's on Friday, so you would change it to whatever your actual payday is. 2 months of the year will always have 5 pay weeks if you're paid weekly. So that's why this extra column is here. So in the months where there's only 4, you don't put in that extra column. If you are paid in a way that it's not weekly, it's bi-weekly, you can still do it and divide this up bi-weekly. If you're paid like randomly, as far as sales coming in, what you want to do then is just again, try to guesstimate on a weekly basis. What I would say is once a week, you should spend about a half hour sitting down, going through your budget, not doing anything else, and just focus on making sure your numbers are all good so things work. All right, so this is done on purpose. You'll see it here. So I just want to show you how to, because a lot of times when you're playing with this stuff, because remember, this budget is just a skeleton. It's just to give you some structure that you can now hang your meat on, right? So you can put your numbers, and it incorporates the philosophies, the investing philosophies that I have into this budget. But obviously, you're going to be in control of changing this. So I have a little bit of OCD. And you'll see here, like this line is like fat here, and then it gets thin. So I just want to show you how to do this real quick. So I want all those to be fat lines. So I'm going to do that. I'm going to right click or double click. You're going to go here, format cells. All right. So right now it's this thin line. So I want this thick line, and then I want it all the way down this side like that. Okay. Great. See, now it looks all pretty again. All right, cool. So, so when you do your budgets, all right, so you're going to start off with your monthly. Now, what I'm going to do in the following videos, you're going to see examples. So I'm not going to spend too much time doing examples right now, but you'll see examples in the next couple of videos of different, these already filled in. But let's say your paycheck is $500. Well, let's say for the month, it's $500 a week. So let's say for the month, you're making $2,000 for your paycheck. All right, so you'll see it automatically puts your $2,000 here. 10% of your income should go to investing. All right, 10% of what you earn is yours to keep. So before you even get to your expenses and your bills and everything, you got to have that 10% come out. All right, there'll be another video talking about this, and hopefully you subscribe to that. Now, nope. I'm not even gonna let you change it. I'm gonna tell you how. Okay, we'll talk about it later. So then this is going to just take that $200 out, and then you have your income after you're investing. All right, so that money goes there. Now, when you do your budgets, let's say your budget $500 is your budgeted money, so that's going to come here. So now on a weekly basis, hey, you're going to get your $500. $50 is going to go towards investing. You'll see it also shows up down here. All right, so your income and whatnot, and then your after income investing, and you'll see over here your budget is going to start adding up. So if we put the 500 in each one, it'll be 2,000. So these columns over here are what actually happens. So this is your budget. This is what you planned on your budget at the end of the month. This is what actually happens. So let's say for someone like me who doesn't have a steady, paycheck every week. So let's say this week I only made $400, but the next week, I budgeted 500, but now I had, $800 check. So you could see, so that way I can see, hey, what did I make versus, what did I expect? All right. So, and then it also balances out where your, how much money is going into your investing accounts. All right. So that's your income. All right. So assets, for example, I have, like I just mentioned, with a dividend. So I would write in here, my dividend account. So dividend. All right. And let's say quarterly, it pays me, I don't know, $300 a quarter. All right. Now, if this month, if quarterly means it's going to pay you every 3 months. All right. So January, February, March is the first quarter of the year. So if I'm getting paid on this in March, then I wouldn't put that 300 when the quarterly gets paid out. I wouldn't put it in this month. But when I did the budget for next month, then I would put that 300 here because I know I'm going to be getting that from that asset. Make sense? Okay. Cool. And then whatever, so now the budget, by the way, what I would budget with that is I wouldn't put that budget in there unless I know, well, you should know, you can obviously check and see, but depending on when some stocks pay, like they might pay on the 12th, some might pay on your 19th. So what I would do is you can either, if you want to get real detailed, you could budget out that way, or I'll just split them, or I'll just put them there, or I'll just leave it out of the budget and I'll just put the actual when I actually get it. So that is, and then other income could be things like alimony, Social Security, any kind of income you get. And if you want to, if you add it, if you have more incomes, I already showed you how to add more in there. All right. So what I'm going to do, actually, no, I'll leave these in there for now. I know I'm going to have examples more later. All right. So now the next level is your expenses, right? So your assets are all done. Now you're going to talk about your expenses. Excuse me, your income is all done. Now you're going to talk about your expenses. So, an expense versus a liability. All right. So a liability is something that takes money out of your pocket for this purpose, right? So on your balance sheet, you would have an asset being that dividend stock. A liability, for example, might be your car, right? So if you have car payments, right? So your car is a liability and you have to make payments on it. So that's what the liabilities are. The gas for your car is just an expense. It's just something that you're paying. You're not paying it off. So a liability is something that has a balance to it, and then you're paying it off, and it's creating an expense for you, so you can get rid of that. But like, for example, food you need every month, unless you're an Android or something. So food would be an expense, right? And then you would say, okay, there's no balance. So there won't be any balance for food. So let's say you wanted food here, and let's say monthly, you wanted to budget $150 a week. So $600 a month would be your budget, right? And then here you would put car. And let's say you owed, $15,000 on your car, and you're paying $250 a month. Right. So car insurance would be an expense, right? Because it's on a balance that you're paying off. It's something that you would have. I mean, yeah, I guess you are kind of paying your car insurance off, but I would make that an expense. It's not something you can get rid of. Liability is something you can get rid of. You pay off the car, then you don't have that bill anymore, right? With insurance, you would always have the bill. Gas, you would always have the bill unless you got rid of the car. So, but it's not something you pay off. All right, so hopefully you have an understanding of what an expense is. And so you might have a lot more expenses. Again, I already showed you, add the lines. Just make sure you add the you multiply out, you fix the copy and paste the equations here. All right, so now at the bottom, you'll see that this is totaling up your liabilities. And so let's, let me put another one in here. Let's say you had a credit card with a $3,000 balance on it, and you had to pay $50 a month. All right, so these two numbers down here, total liabilities, total expenses, are going to be the same. Right, so this is just totaling up. Well, in this column, let me rephrase. In this column, they'll be the same, because this is totaling up B30, right? So right here, all your liabilities, and it's going to total up all the way down here. So if you have more liabilities in this, you'll just keep adding. If you have a lot of credit cards, whatever, you'll keep adding them there. And the total expenses is totaling up everything. So from B19 here all the way down to 37. Now your expenses don't have a balance. Food does not have a balance that you're paying off, right? So these two numbers should be the same, all right? So just a check there. So if you see they're not the same, then the formulas are messed up. Something's wrong in here. So you want to look at the template or look at the formulas and make a correction. It's probably because you added a line somewhere, and if you added a line in a wrong place. So just make sure to double check. I'm just giving you a double check. Now you see these numbers are different. Why? Because this one here, the liabilities, and this is why you add lines in the middle, the liabilities is adding up just these two, right? Because it's the sum of C30 through C37, right? So if you added more liabilities, it would sum that up. But the expenses is totaling up everything in this column, right? So these should be the same. These should be different. If you see something different there, then that means look at the whatchamacallit, the equations, and see what's screwing them up, and then you can change them if you need to. All right, so let's say budget. We're budgeting, what did we say, 150? The car, we're going to divide that, divide it by 4. Let me make it 240 a month. Makes my math easier. All right, so $60, and I'm going to make this also $60 a month. So this will be $15. All right, so you'll see now we know to pay off my liabilities, it's $75. To pay off the expenses for the month, my budgeted is $225. All right, and then when I get the actual, now in the actual, you're gonna just divide all these monthly. You're just gonna divide them by 4 or by 3. Excuse me, by 4 or by 5, depending on how many weeks they're in the month. Now, when you actually pay it, okay, so let's say food is not a good example, but let's say your car bill. You're not going to pay $60 a month to your, $60 a week to your car. Like you're just going to pay it. So let's say you have a payment on the 240 is going to get paid on the 19th. So what would happen is on the 19th, you would still put the $60, but what you're going to then do is highlight that. You can highlight it green, you could highlight it red, whatever. So I'll show you how to do that. You go here, you go there, and you would just make it a color, all right? So that way that's when you paid it, all right? So what you're doing with the actual, what you're doing with this budget, all right, is you're not saying, okay, hey, actually I wrote a check and where I went online, I paid my car payment, it was $240. You don't, that's not what you're gonna put there. What you're saying with this is that your money is going to go into an account, all right? And so every week you're going to be putting $60 in that account. So there should be enough to pay in that account to pay your 240 bill, because you're putting it in every week, and obviously it'll come beforehand too. So you need to set up, I have a minimum of 3 accounts. One account is going to be bank accounts, that is. One account is going to be the one that you pay all of your bills out of, all right? So everything that's going to be your expenses, all that's your money can go in there. You can direct deposit into that account. So your money goes into that account, all right? Then your second account, bank account that is going to be a savings account, all right? Now that savings account is what you're going to use for what I call your 6 month. I'm going to get to that in a little bit, but that savings account is where you're putting that 6 month money that we'll talk about in a little bit. And then the third account, your third checking account, so you have one checking, you have one savings, and then you need to have a separate checking account. Now you can just have two checking accounts with the same bank, or you can, I use Cash App as my no guilt checking account, and then I use my normal bank for my my bills, where my direct deposit goes. All right, so you see this no guilt. We'll talk about that in a little bit as well. All right, so so what happens is now, I guess you should have a fourth account. My fourth account, my investing account, the investment money goes right into my stock portfolio. So you can set up. I have Webull, I have E-Trade. So my investing money goes straight into that account. Now, it doesn't mean that that cash that goes in there, it doesn't mean it automatically is going to I'm going to buy stocks with it immediately. It just means the cash is there. So you can hold cash in your investment portfolio account. So that's where my investment money goes. So I know everything that goes into my investing account is money that I just automatically go. I just redirect. All right, here's the money. Here's my budget. Here's what's staying in there. Here's my no guilt. That's what goes into my Cash App. And then here's my investing. I got to take $50 out and send it to my my no guilt fund, my checking account. All right. So so this money, so you don't have to worry about it. So now the money that's going into your regular direct deposit that you're paying your bills out of and all your expenses, this money is in there, and you're budgeting it and you're just leaving it in there, right? Hopefully that was clear. And away we go, right? So when you pay it, when you actually make a payment, that's you can highlight it as actual. The actual is that you're taking money out of that. So if you actually spent, let's say you went to the supermarket and you spent $140, and that's what you actually did, you would then make that green because you took that money out of there. All right. So you actually did it. Now, if you're looking at the budget the next week, you can, because the actuals, what I do is I have my budgeted for the week, and then the next week when I do my half hour of whatever, I just go into, pull up my statement, and I see what did I actually spend. Right. So you just pull up my bank account, and I say, okay, I spent this much on food, this much on this, and I just look at everything from, it's all blocked off. Right. So you don't have to sit around and you're not doing this daily. You're not doing this every time you spend some money. All you're doing is you're doing your budget. So every time you sit down to do your week for your half hour, you're doing your budget for the next week, or you can actually do your budget. I do my budget for the whole month. I just stick the budgets in there, and then I just go back and I put my actuals in. That's really what I'm doing. And then what was paid. All right. So hopefully I'm not going too quick. Hopefully you're getting this. It's video. You can rewind if you don't get it. All right. So, and you can see everything totaling up over here. So what this does, it allows you to know, hey, all the money that I need to pay my bills is in this one account. And I don't have to worry, is there going to be money in there or not? And I don't take money out of there to pay anything. If the emergency comes up, if I don't fool around with this money that's budgeted, that I actually put aside. So when I say I actually spent 140, I don't take that extra 20 and take it out of this account. It just stays in there. Okay. Because I might spend 160 next week. Right. So, so this money, any money that's in your paying your bills, paying this stuff, that money just stays in there. The money you can play around with, we'll talk about in a minute, is no guilt money. All right. Actually, let's move down to that last part. So hopefully this is all pretty clear to now. All right. If you have questions, email me. You'll see this and more of in the next videos where I show some examples. All right, so now let's go down here. So this is now your summation of what's going on. All right, so for the month, I'm making $1,800. Right, so that's the $2,000 that I make for my check minus the $200 that's going into my investing. So there's $1,800 in the income. All right, my expenses that I've put in here so far is equaling $900. So that's there. So now I have $900 left for what we call decision money. All right, now decision money is the money that's left over. The decision money is where you either become wealthy or you become less wealthy. Okay. It's what do you do with that extra money? What do you do with that money after the bills are paid? All right. And if you make the right decisions with this money, you can start building and building wealth by doing the right thing. So this is just I guess I could say my recommendation, but it's what I do, right? You could change these percentages according to how you want to live your life, right? So what I do is I say, all right, with my decision money, 50% of my decision money, and by the way, these are not real numbers because obviously I haven't put in all my expenses. This is just if I had a car and food, right? So this usually is a lot less. No, it doesn't have to be, but let's just say. But let's say I have $900 left of decision money. All right, what I do is 50% of that, of what's left after I pay all my bills, and I take the money out for investing. 50% of that is I put it into, like I said, I would then transfer that money. So in this case over here, $113 would go into my Cash App or my no guilt checking account. All right, so my bills checking account, and then I have my no guilt checking account. Now, if I want to go out to dinner, I want to go out to a club, if I want to go to the casino, if I want to go buy some gifts for kids, whatever I want to do with that money, it doesn't matter because I already know all my bills are taken care of. So this money that's in my no guilt fund, maybe I don't spend it at all. All right, and I just let it sit there, and I'll save it up. And there is no guilt. Okay, so because you know how sometimes you pay if you're paying something and you know the money is supposed to go somewhere else and you feel bad about it. It's like, oh, I don't know, I'm taking from Peter to pay Paul and that kind of stuff. This money is there for you. You don't have to think about it. You don't have to say, is this the right thing? Is it the wrong thing? That's the purpose of this account, that you can be willy-nilly with this particular account. Anytime you want, if you have something extra you want, you pay with that and you feel fine about it. Okay, so you'll see this is at 50%. All right, so now the equation here says equal, and then parentheses C44. Okay, so this is C44 times 0.5. All right, so let's say you wanted to make your no guilt 60%. All right, you can just changing this number here isn't going to mean anything, right? What you would do then is you would go here, you would just change this 0.5 to 0.6. All right, see this went up to 540. All right, so you can change these percentages depending on how you want to. If you want to make it higher, great. If you want to make it lower, just make sure that these three add up to 100%. All right, between these three things that we're talking about. All right, so let me go back. All right, back to 50. All right, so the next thing that you want to take care of is what I call the liability payoff. All right, so I have the 30% right now. Now, if you're really gung-ho about getting out of debt, you make your no guilt 40% and you make this 40%. All right, so the point being is you can change these, but 30%. So 30% is that 270. So what this liability payoff means is you have your bills, so your liabilities, right? So what happens is every month I'm going to take an extra 30% and I'm going to pay off what's called the debt waterfall. All right, I'm going to put extra money towards these liabilities so I can get rid of this bad debt. All right, so I'll have another video on the debt waterfall, but that's the extra money. So an extra $270. So let's say I have a credit card here. I'm trying to pay it off. This 270 is going to help me eliminate these. And remember when you start this process, just a thought here, you're going to be upset about this no guilt money. You're like, it's not enough. Okay. It's not going to feel like enough because, it depends on where you're starting, obviously, but in general, it's going to be like, but what happens is the more you eliminate these liabilities, all right. So if you can pay this credit card off faster, instead of just paying $60 a month, now you're paying $330 a month and you get it done a lot faster, then that $60 is gone. So now that $60 is going to be in this decision money. This one, instead of this being 900, it'll be 960. And now you have more money in the no guilt, and now you're paying off the liability more, and you can go to the next one, right? So it's not necessarily how it'll work, but depends on which program you go with. If you go with the debt waterfall, that 60 is not going to go there until you pay off all your liabilities. But you get my point. All right. So So that's that. Next up here is the 6 month 20%. All right. So the goal is, this is where your savings account is, right? There's 3 accounts you have: checking for your bills, a checking for your no guilt, and your savings account. Now the savings account is where your 6 month money is going. So what you want to be doing is you want to get to the point where you have 6 months of all of your expenses. All right. So these $18,000, excuse me, not that, not including your liabilities. Your total expenses, so it's $900, whatever your monthly expenses are. You want to get it so that you have, when you total up all your monthly expenses, that you have 6 months of that saved in this account. It's going to take you some time to do it. Well, again, how much time it takes you depends on you and what you want to set these percentages at. But you want to get that to 6 months. Now, why do you want to get to 6 months? You want to get to 6 months because when you're able to do that, when you're able to have 6 months of money in that account, you are, number one, you're in a position of power, right? It's like, you just know, like, if you lose your job, if COVID happens, if you don't like your job and you just want to go out, if you want to start a business, if you want to, take 3 months off for whatever reason, like, somebody gets sick, you know, you have enough money to pay all your expenses for 6 months. For half a year, you can figure out, find a new job, start your business, do whatever you got to do. And so it's a real powerful thing to have that money there and have that security in knowing that you're starting that freedom. All right. So you have that base where you can now do something, because a lot of people won't quit their job, or they'll stay where places are. And I don't care if you're adding $2 a month, to the 6 months, whatever it is, start building that account, because you want to get that account going. Now, another thing that happens with this 6 month savings account, because if you notice, a lot of people will put, I haven't talked about miscellaneous, right? A lot of people put miscellaneous in these things. Like, I don't know, what if something just happens? What if I have my car breaks down? I need to have miscellaneous in here for that. There is no miscellaneous, right? Miscellaneous means you don't know what it is, which means you do not account for it. You account for things that you know, and miscellaneous, you can't. What if you hit the lottery? You're going to put that in put that in here. Okay. So, no, you don't account for that, but life happens, right? We know things are going to happen. So that's what this 6 month savings account is for. All right. So if your car breaks down, that's where the money comes out of first. All right. And honestly, you want to get to the point where this is the only place that you'll take money. If the money isn't there in this 6 month, then that's it. You don't take it out of your investing. Okay. Because your investing is what's going to set you free in the long run. That's what you're doing. So this 6 month is where your emergency money comes from. If you need to, and then it's just going to set you back, and then you want to try to build it back up again. Right. So eventually, if you could pay off all your liabilities, then you can up this 6 month, putting as a 6 months. Or if your liabilities, if you're not as excited about paying off your debt, and you want to get the 6 months faster, you might want to lower this down to 10% and make your 6 month 40% if you want to get there first. So this is where you have your play, whatever sings to your heart the most. But those are your accounts. All right. So I'm talking a lot here. So now, at the bottom, should get rid of all this because it looks funky with all these negatives here. Let me get rid of that. No fill. I also saw that these lines are kind of wonky. Sorry, I said I'm a stickler for this stuff. I am a Virgo, for those of you who are astrology people. All right, we'll do that. We'll do that. We'll do that. Okay, much better. Now, so down here, you have your balances. So this is where you're going to start seeing, there's a saying, if you want to eat an elephant, well, how do you eat an elephant? And the answer is one bite at a time. So even though it looks like a daunting task, how do you climb a mountain? One step at a time. All right. So like liability payoff, So now all your liabilities, so this number, the balance, if this was the way we're going, if this was our starting balance, it would be $18,000, right? So that's my liability. At the end of the month, what I would expect is this 270 plus this $300, right? So I'm paying $300 towards the liabilities, and I'm making an extra $270. So altogether, that's $570. So I would take $570 from 18,000, and that's 17,430. That's right. I know how to do math fast in my head. All right. So I can say, okay, look, hey, if I follow the plan at the end of the month, I'm going to be lowering this liability. All right. Now you're 6 months saved. All right. So this is what's in your savings account. So let's say in that savings account there, you said I've got $300 in there right now. I'm going to be putting another 180 in there. So at the end of the month, I'll have 480 bucks in that. All right. And invested. All right. In my stock market portfolio, I've got, let's say, $1,000. All right. I see up here, I'm going to be adding another 200 for investing. So at the end of this month, I should have $200 more. All right. And then at the end of the month, you could put these balances. What's the actual number? That's what goes in here in these at the end of the month. And then these are just breakdowns. So when you actually do it, so now let's say it says before and after. So when I got to this week, I had $18,000, and then my payoff, my liability payoff is going to be $66 plus. Let's say I made my payments. This payment doesn't mean I made the payment to the car. This means it's in my account, the checking account, right? Because I'm not going to pay it till here, till there, right? But I did put the $60 away. It's in the account. It's in the checking account, ready to go. So $75 is there, plus this change now. 6 months saved. Right, so I have 300. Oh, sorry, I was doing this. 18,000. So I'm going to my liability payoff. I'm going to pay 44 plus 75. 44 plus 75. Could do it in my head, but I'm not. 119. Right, so I'm going to do 119 minus 18,000 is 17,881. All right, so that's where I am now. And then my 6 months saved, same deal, right? So starting balance was 300, and then 6 months saved, I put another $29 in there, so that's 329. All right, I had $1,000 in my invested account, and I look up here, I added another $40, so now I have 1,040. All right, so there you go. So as time goes on, you can each week, it's like, all right, I'm making small progress. And and now just to wrap this all up, again, you take a half hour to do this. I'm showing it all in one time. So if this is daunting to you, watch it again. When you start doing it, when you do it, just, take 30 minutes a week. You just do your actuals. It's like anything else. When you first do it, it's going to be like, what do I do? Where do I got to put this? How does this work? But I will tell you, it doesn't usually even take me a half hour to do this. I sit down, I open my bank accounts, I throw my numbers in, I do some subtracting. I go, okay, I'm getting excited. This is getting a little higher. That's getting a little lower. Hey, maybe my investment account went up. So now it went a little higher because the stock market went up or whatever. And so you're constantly focused on what's going on, what your money's doing. All right. You have your no guilt. So you have your money you can just blow and spend on whatever you want. And all your other stuff is taken care of. And you can see the growth of your money. So this program will, if you do this month after month after month, you're going to see your investments going up. You're going to see your wealth building. You're going to feel great. Your bills will be paid. You don't have to pay all these extra fees for, not paying things on time and whatnot. And you'll know, hey, one of the things I loved, one of my mentors, I remember I was amazed that when he got a bill, he would just pay it, and it was no big deal. Like, I didn't grow up in like that. I grew up with people like, where are we going to get the money from? We do this, we use this card. How are we going to do this to do that? And it was just amazing. And I said, I want to know how you do that. All right. So small thing like that. But all right, that's your budget, your WISE budget, and good luck with it. And of course, let me know. Send me comments. Let me know how things are going for you, and let's build some wealth. If you would like to support me and the channel and would like to get up to 4 free stocks, you can sign up with Webull so you can start your stock investing. There should be a link below or on the WISE website. You get 2 stocks just for opening an account, and you get 2 more stocks for funding it with $100. So you can get some pretty cool stocks for free, and I hope all of your investments are wise ones.